Hey Team GCI, welcome back to our 7:30:90 analysis. It's Friday, January 5th, so we can still say one more time, Happy New Year. Hope you had a good rest. Anyway, we didn't do an analysis last Friday, naively assuming that not much was going to happen. Well, a lot did happen, but it wasn't predictable. It was not on the economic calendar, but I'll go through that as we carry on. So what we do every Friday is take a look at the markets, and you're going to hear me repeating quite a few times. This is not trading advice. This is simply an analysis that we do for FX Street every Friday. If you want to see the actual analysis, just go onto the FX Street website, take a look under rates and charts and go to forecast poll, and you will get an extensive list of currencies. You can see all the major currencies and then gold and oil. So if you want to see one, just click on, here's euro dollar. And here we have a list of experts who predicted last week that euro dollar would go down. So it was 67% bearish and 33% bullish. I'm not going to go through every single currency, but if you want to take a look and see where we are with these things, you certainly may. So if we just go back to the previous week, we can scroll down and you can see who actually does the analysis. There's quite a few banks. I'm there, of course. Take a look at what I have to say. And we take a look at 1 week, 1 month, and 1 quarter out. So we're predicting today what's going to be happening by the end of next week. So it's possible that at some point during the next week, we will hit this price, either bearish, bullish, or neutral. And you can see that quite a few of the banks do not predict week by week. They only look at month and quarterly. Nothing wrong with that. And FX Street used this data to sell to brokers for use with their clients. So that's where you can find all these forecasts that we look at. So I'll leave that alone for now. So what we want to do before we jump into the forecast, and again, you can see the euro dollar chart right here. This is a weekly chart. You may not want to trade on a weekly chart, but we use this for analysis. And you can see here what I've done. I've drawn a trend line which started last November, and I've got some shorter trend lines based on the current uptrend of euro dollar. So basically, if we look at euro dollar right now, we've got euro strength and dollar weakness, except for this last candle. So we'll go through that in a second as to why that fell. Before we jump into the weekly analysis, we'd like to take a look and see where all these different currencies are going right now. And if you've seen my videos before, you know I work in profiles. So what I have here, I have a profile called FX Street. If I take a look at the tile view, you really can't see much. It's just too cluttered. So I go back and I use the fully extended version of each chart. But what I'm going to do now is go back to another profile that I call United States dollar, US dollar. These are all 4-hour charts based on all the major currencies: euro dollar, Aussie dollar, Kiwi dollar, etc. And we can see right now that there is a bit of dollar strength. So again, we looked at euro dollar, and you can see that from the end of the year, the 28th of December, till now, the dollar has definitely got stronger. So is that a function of the euro or the dollar? Well, if we look at every other pair, we can see as well, Aussie dollar is also down. It's definitely dollar strength. So you're going to ask why? Because if you're following the fundamental events, you will know that the Federal Reserve in 2024, this year, will likely be lowering interest rates. So when we lower interest rates, that means the currency gets. So why then is that not happening right now? Well, basically, there's a lot of, I don't want to go into a lot of details about bond yields, but basically there was a big sell-off in the equity markets. We looked at the Santa Claus rally, which happens almost every year. It's reasonably predictable, where the stock markets head up in December, and they did exactly that. And not unlike many other years, there was a big sell-off on the very 1st of January. So basically, a lot of investors dumped their American stocks. And when you sell stocks, you have to sell it into some other commodity, which in this case is the American dollar. So the American dollar got stronger because everybody was dumping their stocks. So that's my theory anyway. So I'm thinking, and I have to make an educated guess as to what I'm going to predict for the next week and month and 90 days, that the American dollar weak strength right now is just an anomaly. It's temporary. It may get stronger into next week, but my gut feel is it's going to get weaker. And again, the Fed will be telling us exactly what they're going to do. And they've basically said they'll be lowering interest rates sometime in 2024. We don't know what yet. If you're starting to tune out about fundamental analysis right now, please don't, because it's really important that you understand a bit about fundamental analysis on top of your technical analysis. If you follow any of my videos or classes, you will know that I put fundamental analysis on top of technical. Chart patterns, trend lines, support and resistance is always critical. Candlestick patterns, fundamental analysis always beats all these things. And I'm going to show you exactly why in a second. So getting back to looking at the different currencies. So that's what happened last week. We had a big equity sell-off. The American dollar got stronger. Something else happened too. I'm going to go to my profile for the Japanese yen. And we've been talking about the Japanese yen getting stronger. Well, of course, when you have things like massive airplane crashes and earthquakes, it definitely affects the currency. And you can see exactly what's happened. The Japanese yen has got a lot weaker. You can see this is a 4-hour chart. So from the 29th of December, oops, what happened? Come on, let's go back. Sorry, from the 1st of January up until now, it's gone from 140 yen, 141 yen to 145 yen roughly. So that's about 4 yen in difference. So the Japanese yen has got weaker, and we've seen this before, whether there's tsunamis or a nuclear. Remember years ago there was a nuclear accident in Japan. The currency gets weaker. If you trade the Nikkei, it actually got stronger based on the currency, and that's basically because Japan is a huge exporting nation. When the currency gets weaker, it's better for exporters in Japan, like any country. So the Nikkei got stronger, but we'll talk about that in another video. So this could present some serious opportunities. You can see here as well. This is only a 4-hour chart on almost all the Japanese. In fact, on all the Japanese yen pairs, it's starting to curl over. But we'll look at that next week in our market analysis videos, because there could be an opportunity to take advantage of renewed yen strength if the earthquakes don't get worse. And obviously there are no more plane crashes. It was quite a sad event that happened this week. But these things do affect currencies. So we can see going into our analysis that the American dollar is a bit stronger, maybe temporarily. The Japanese yen is quite a bit weaker. If we look at all the currencies, the yen is definitely the weakest currency. Again, this may be temporary. So we take that into account when we're looking at our weekly, monthly, and quarterly analyses. And again, I'm going to repeat, this is not trading advice. This is simply something we do every Friday for FX Street. So let's jump into it. And the next thing we need to do before we do anything else, and again, please don't tune out. A lot of people don't like this, but this is the economic calendar. There are two ways to use the economic calendar. One, the way I actually trade after news events, and I find it quite reliable. And I'll do a video at some point on how to do that. It's actually quite a good thing to do. But a lot of traders will use the economic calendar to tell them when not to trade. And especially today with the non-farm payrolls coming up, which is U.S. non-farm payrolls coming up, which is the biggest event on the economic calendar every month. In fact, I do know of some shops, prop shops and hedge funds who actually close their doors to the traders on the first Friday of every month because they just don't want them trading into the volatility. If any economic news, if you try to second guess what's going to happen, we call it gambling, the G word. So the way I use economic news, I set up my technical, I look for technical setups. I wait for the news to drive price action against the trend, and then I find a good way to get back into the trend on the pullbacks. But I'll do another video on that at some point. So what we have right now, in fact, we talked about this 2 weeks ago. As you can see, last week's calendar had nothing on it. So no events. Obviously, Christmas was in there and the holiday. This week we have the non-farm payrolls, Canadian employment, and a PMI today in the United States and Canada. Another interesting thing to do is to trade dollar CAD because you've got unemployment rates and employment change in both countries. And if they go the opposite direction, typically the Americans will win out. The American dollar is the currency of the largest economy in the world, so it typically has more weight. But you can find if you have Canadian employment going against American employment, you'll find an imbalance that you can take advantage of, sometimes a few hours after the news is announced. But we'll look at that in a different video. So looking at next week's, and very quickly, the U.S. Federal Reserve will be looking quite seriously at the non-farm payrolls, because what will happen is, typically they're saying 168,000 new jobs will be created, or would have been created in the last month. If that number is higher, that means there were more jobs created, which means to the Federal Reserve that they may have to raise interest rates, which will make the American dollar stronger. If they see the numbers lower, then they will be confident that they're going to lower interest rates, which they've already said they will do. So this is a very important number. However, next week, let's take a look at next week's calendar. So we've got Sunday the 7th, so next Monday is the 8th, et cetera, et cetera. Next week, we have American CPI, which arguably will be more important than the unemployment rates and the non-farm payrolls, because that is the best indication of inflation. So every central bank in the world is trying to get inflation under control. And if they get inflation under control, they will start to lower interest rates. Basically, when you have, and we got lucky this time, guys, please believe me, we got really lucky. If inflation gets out of control, and it happened because of the pandemic and it happened because of the war in the Ukraine and the disruption of natural gas, which happened a few years ago, that caused massive inflation. And it's still hanging in there. Fortunately, the central banks were quite prudent and with a lot of experience managed to keep these inflationary problems under control. If they hadn't, there's an easy way to fix it, and that's to break the economy by raising interest rates like crazy. Fortunately, that didn't happen. Obviously, there were some hardships, and there have been, and there always will be. But the economies by the central banks were pretty much contained. So we got lucky that way. Now we're in a situation where inflation is coming down. It's quite important in the UK right now because the economy is not healthy compared to the American economy. So getting back to next week, next Thursday, you can see on the calendar American CPI. That will be a critical point for the U.S. Federal Reserve, and I'll be doing a video on that next week. So please stay tuned for our market analysis next week. Okay, so that's what we've got to look out for. So basically, we've said the American dollar is slightly strong, may not be temporary, or may be temporary. The Japanese yen we looked at is weak, may be temporary. I'm not going to go through analysis of every currency, but this is what I do very often. I look at all the different pairs on each currency, and you can see in this case of the Japanese yen, in every case, price action is going up, which means a weaker currency. I'll give you an example again. If we take a look at the euro, okay, you can see euro yen is quite strong against the yen, but that's a no-brainer. But it's also very strong against the Australian dollar and the New Zealand dollar. But it's pretty neutral against everything else. So that tells me that maybe it's not the euro that's strong, but it's the yen, Australian dollar, and the New Zealand dollar that are weak. So I can go through all these, but we'll leave that analysis for another time. So let's get back into what we think is going to happen with our FX Street 7, 30, and 90 analysis. So I'm going to go back to my profile, FX Street. Okay, so here we have basically, so we can see this weekly, this is the weekly chart. So every calendar represents 1 week of price action. We can see a big red calendar here. And again, that's because the American dollar got strong because of the equity market sell-off. So I'm going to quickly zoom into the daily chart, and you can see here I've drawn trend lines. So there's definitely trending. It's definitely trending up. So what I'd like to do with my analysis, I want to take a look at trend lines. So obviously we have one here. Price action is bouncing off. Stochastic oscillator, which I really like. Price action is oversold and turning up. So in theory, we should be looking at euro dollar going up. So that takes into, that assumes the euro is getting stronger. That assumes that the American dollar strength is going to subside. So what I'm going to say is that in 1 week's time, I want to see price action back here around the 1.102 area. And I'll plot that on my FX Street forecast, so you can take a look at it probably late Friday night or even into Saturday or next week. So that's the weekly forecast. So again, assuming that going forward into the next month, that the U.S. economy will be, or the U.S. dollar will be getting weaker because the Fed is going to lower interest rates. I might be looking at this upper trend line in 1 month's time, about 1.12. But also, as we mentioned last time, the European Union, the European Central Bank will be looking at lowering interest rates as well. But the American dollar always takes precedence. So let's go back to our weekly chart. And I'm thinking after 90 days, we'll be hitting back to this upper trend line. So take a look at my FX Street prediction, say, either on Saturday or next week, and you can see what I and maybe all the other banks. 2 seconds, guys. Thank you. Okay, let's quickly move on. So we've got the pound. So here we have the weekly chart on pound dollar. Same situation. The UK economy is still quite weak. Rishi Sunak has postponed or decided not to have a general election. Let's take a very quick look at the pound on our 4-hour charts. And we can see it's pretty mixed. It's definitely stronger against the euro, weaker against the dollar, obviously very strong against the yen, but it really doesn't help us in terms of what the overall direction of the pound. It's stronger against the Kiwi dollar and the Australian dollar, which we talked about earlier. So right now it's reasonably neutral, but we really have no indication as to what's going to be happening to the UK economy. There's a GDP report next Friday, but that may or may not help. They want to see more, they want to get inflation under control. Let's go back to the weekly chart, the FX Street, I should say, profile. So if I assume pound weakness, I'll say that price will come down to this lower trend line. And that is by next week, I should say. So, but the stochastic oscillator as well is looking overbought on the weekly chart. So price action coming down wouldn't surprise me. But then again, going back up, and I spent a quarter of my life living in London. I've seen the economy rebound very, very quickly. So I'm going to be optimistic about the UK economy. And have dollar weakness take over. So I'm making a similar prediction to the euro, except for next week. So I'm going to have price action going back to this upper trend line about 1.4. And you can see that the high of last year was about 1.41, which was in 2021. Okay, right, so we just talked about dollar yen. So again, you can see this big green candle from this week. And again, this is a direct result of the earthquake. So, and this is where, I mean, I could easily say, okay, guys, well, we've got the stochastic oscillator looking very oversold. But again, fundamental events like earthquakes generally take precedent over technical indicators. In fact, if we look at MACD, it's actually looking quite bearish. But again, if we do have a situation where the earthquake does not persist, things get better in Japan, we could see price action coming back down again. So, I mean, I could draw trend lines here, but you can see we've already broken this lower trend line, which is clearly a bearish sign. So where do we have support and resistance? Right about here. So I'm going to be optimistic and say that the Japanese yen will recover a bit. And let's say we have it going into where we started the week, and then in 1 month's time, heading back down to support right about here. And in 90 days' time, because the Bank of Japan are talking about finally getting out of negative interest rates, the earthquake may postpone that a little bit, but I don't know for how long. So this is my prediction for dollar yen, bearish, bearish, and bearish. Okay, looking at dollar Swiss, again, you can see that this is quite clear now. You can see US dollar weakness all the way down from last October. And we finally have a big green candle from last week, which was, again, temporary. I'm thinking temporary American dollar. So what I'm thinking for next week is that price will return back to where it started, just like the Japanese, just like dollar yen. To be honest, I'm going to ignore the stochastic oscillator this time. It looks a bit flaky anyway. And you can see definitely with MACD that we are definitely heading into bearish territory. So how low can it go? This is the tricky one with dollar Swiss because it's quite low now. If I go to the monthly chart, we are at, I mean, there's really no data that says that we've been this low before, except during the big crash of 2015. So we'll go back to the weekly chart. I'm going to be very conservative and say it's not going to go that much lower. So I'm going to say that my predictions will be no change into 30 and 90 days. Okay, Australian dollar. We talked about the Australian dollar being temporarily weak or maybe completely weak, and you can see here's why. A big red candle on the weekly chart. Let's quickly take a look at the daily and see if there's anything we can see. It is quite interesting. We can see that price action has tried to break this upper trend line on the weekly. So if we take a look at price action on the daily chart from last October, we can definitely see an uptrend. So we have a conundrum now. We have American dollar weakness, which may be happening soon, versus Australian dollar weakness, which is happening right now. So if I look at the daily chart, I can see obviously bearish indication on the MACD. Oops, I missed. But I can see the stochastic oscillator looking a bit, very oversold. Is that going to come back around? I'm going to say yes. I'm going to say it's going to come back around. So I'm going to make a prediction purely based on technical analysis. So I'm going to say that in 1 week's time, price action will return to about 0.67. And again, with US dollar weakness versus Australian dollar weakness, in this case, I'm going to go purely on the technicals because there's really nothing on the horizon for the Australian economy except for CPI next week on next Wednesday. But I'm going to go purely technical and say 1 month's time, we will have price action up around 0.68. Let's go back to the weekly chart. And where do we find resistance? We find resistance somewhere around 0.7. So in 90 days' time, right about here. Again, this is not trading advice. This is just something that we do every Friday for FX Street. Right, let's go to the New Zealand dollar. So we need to keep in mind what we've just done for the Australian dollar. So let's take a quick look. So we said bullish in terms of price action, because typically we want to do a similar thing to the New Zealand dollar. And again, we've got almost the exact same chart pattern. MACD is different. Let's go back to the daily chart. And we can see we've got almost the exact same situation with the New Zealand dollar as was with the Australian dollar. So I'll take the same attitude. I will go purely technical. I'm going to say the price action next week will rise back to the top of the candle we saw and continue to the upper trend line. And let's go to the weekly chart. Can't even see my boxes. And sorry, let's take a look at where resistance is. Resistance is clearly here. We've got a huge line of resistance. If you don't know about support and resistance, please learn. And you can see as well, so this is resistance from January of last year, June of 2022, and the support at the same level from 2020. Yes, I know it was 3 years ago, but this is what we call a key level. So I'm thinking in 90 days, price will be somewhere around here. Okay, right, dollar CAD. Okay, before we look at dollar CAD, I want to look at oil. And the reason is, if you're new to trading, you really need to understand that the Canadian dollar obviously is driven by economic factors within its own country. but it's also driven quite a bit by the price of oil. So if we go to WTI, jumping ahead here, obviously, we can see on the weekly chart that we have a lot of consolidation. You can see price action at support, which is about, pardon me, it's about $68.50 per barrel, and we're sitting about there right now. We have the stochastic oscillator turning up, but we also have MACD going down. So we've got two conflicting technical indicators. We have some temporary bullish price action. Let's go to the daily chart. In the last few days, basically based on unrest in the Middle East. There was a lot of unrest in the Middle East. We've got tankers being attacked. We've got a war in Israel, Gaza. So the price of oil has been temporarily gone up. Let's assume that price is going to come back down. I'll go back to the weekly chart. I'm going to say that price will come back to this line, this key level. And in 1 month's time, there's another key level down below. I've been predicting the price of oil to fall for quite a while, and you can see that I was in fact right, because this last year, it did fall from April, and it's been falling ever since. Obviously some blips recently. So I'm saying in 90 days, everything being equal, we could have price down quite low. Actually, to be honest, guys, that's too low. Let's say around $60 a barrel. One thing we need to keep in mind that different economies and different oil companies like to have at least a certain level. A lot of the big UK oil companies say they break even at $35 a barrel. The Saudis like it to be about 60. Obviously, they like it a lot higher. But $60 is pretty much their bottom line. They don't want it to be any lower than that. So temporarily, as we just said, we've got an increase in the price of crude in the last week. So if we go back but what we're saying is that prices will fall into the next quarter. If we go back to the dollar CAD, we can see that the American dollar, again, with its strength. So if the Canadian dollar gets weaker based on the falling price of crude, then we should have a tie basically between the American dollar and the Canadian dollar. So it's a bit tricky right now as to which way it's going to go. Again, this Friday, or today for that matter, we've got unemployment data and employment data from both countries. So it's a bit tricky. So if you look at on the technical side, we've got an oversold stochastic oscillator. So all things being equal, I'm going to say that price will return back to this trend line. But I honestly don't think it's going to maintain that. So I'm going to look at a 1 month call coming back down to this line of support. But going back up based on the price of oil. So we've got two economies who are hoping to lower interest rates, but one economy is being driven by the price of oil. So it's a bit tricky with dollar CAD. Okay, Euro Yen, here we have another situation, as we said earlier, where we could take advantage of yen strength if it does return. Pardon this bit of a funny trend line. But you can see that price is coming down to this trend line and went back up based on the problems in Japan. But we can also see that, well, we've got, and again, the stochastic oscillator is showing us oversold and turning up. But again, fundamental factors outweigh that. So the question is, do we see the euro getting a lot stronger? If the European Central Bank starts to lower interest rates or talk about it, then no. If the threat of earthquake subsides in Japan, then we've got a return price action lower. So I'm going to say, I'm going to be optimistic about Japan and say that price action will return to where it was at the beginning of the week. And I'm thinking as well, with all the yen pairs, we're going to continue to see yen strength. So where do we have Here's a good key level right here, about 148. Pardon my eyesight. So there's my prediction for Euro Yen, 7 days, 30 days, and 90 days. Okay. Okay, we're going to Pound Yen now, so we should have the same situation. And it looks like we do. It's a bit of a funny trend line here with this lovely double bottom that happened many months ago, back in a year ago actually. So I'm going to say the same thing. Again, the pound economy is still a bit dodgy. I'm hoping for yen strength. So I think in this case the yen is going to win out. So where do we have a good line of a good key level? Right about here. Okay, and again, if you want to see the numbers, you'd be able to go onto the FX Street forecasts, either late tonight or even tomorrow and into next week. Okay, Euro Pound. Well, we've got a lot of consolidation happening. Let's quickly zip out to the daily chart, and it really doesn't help us. It's just a bit of a mess. You can see we've got a ranging market. We did have a ranging market, I should say. Back in July, price tried to break out. It's come back into the range. Again, 2 days ago, last week we had, Monday, we had quite a good fall in Euro Pound. So it's very tricky right now to predict where we're going to go. If we take a look at the daily chart indicators, however, we can see that MACD is trying to be bullish, but you see the signal line breaking out of the histogram, but it's such a low level around the zero mark. We also have the stochastic oscillator looking oversold and trying to turn up, but it changed its mind. So we've really got, as we say, technically wishy-washy technical indicators. Let's go back to the weekly chart. This is going to be finger in the air stuff, guys. I'm going to say no change into next week. Maybe a little euro weakness. And again, I'm trying to be an optimist on the UK economy. So I'll say that by 1 month's time, it'll come back to this key level. And as we are range trading, as you can see, we had support back here as well, which is like almost 3 years ago. So I'm going to say that within 90 days, it'll go back to the upper, to resistance. Okay, gold. This is always fun. So here we have a serious uptrend in the last, since last September. And that was based on, in fact, I can say it was October the 7th, when the Israel-Hamas war broke out. The price of gold just went up, and it just stayed up. And as you can see, it's trending up. So let's go to the daily chart, and you can see quite clearly. Make this trend line a bit longer. Price action right now is at a lower trend line. The stochastic oscillator is not exactly that exciting. It hasn't come down to the lower 20 level yet. And one of the reasons that price action dropped the way it did was US dollar strength. So again, I'm going to assume that that it's just temporary. We still have a lot of geopolitical stuff going on around the world, which obviously affects the price of gold. So I'm going to say it'll go back to the top of this candle from 2 days ago. Let's go back to the weekly chart. And I'm thinking gold is going to keep rising, but not that much. It's still, as you can see, it hit all-time record highs not long ago. If I see stability in the world into 90 days from now, I'll say price action coming back down to the 2000 area, which is right about here. Okay, and we've already done oil. Okay, that's it, guys. Again, I'm going to repeat, this is not trading advice. This is simply looking at the next week, the next month, and the next quarter. Let's catch up next week with our video. We've got a lot to analyze with the yen, the American dollar, a lot of news happening. And from now on, good trading.